for Friday. Spot commodities. Brent, just with oil getting back into just a normalized sideways trading range. Nothing fancy. Canadian dollar, same thing with the pound. Number one exporter to America. America gets most of its oil from Canada. All right. Weekly bars again. All right. Right now, these are end of the day, so from Friday's trade. S1 on here. It wouldn't take much to swipe the bottom and continue on. That's how I lean. There's still bodies in here. At best, it's sideways and cocoa. Coffee. Still in a choppy thing. Sideways trade. No real washout in here. Like I said, a big fan of writing naked puts to get long in there. Decent turn yesterday, moved above the moving average here. And copper, I could see a swing forward, but, kind of like this pattern up here. You get one green bar and then they open trade higher and whack it. So same thing, come up here, swipe, whack it. But to see how it holds say the 50% in here. All right, I suppose set an alarm for this week's low. Okay, corn sideways too. Like I said before, I expect 2 years of bumper crops, and then we'll probably get a drought sometime after 2018. Cotton, same thing. For producers, right covered, right. If you want to get into this, you can afford, 20 cents lower, right? So, there's another one. Okay, how do I look at this one? We'll say it's like, think of silver at $6, $5.80, $5.60, $5.40. Look at it that way. All right. For cotton, trade it that way too. Well, that works out too. I think it's 50,000 bales, right? 50,000 pounds. I think it's on. All right. Unleaded gasoline. Depending upon today, if we close higher, we may have a short-term bottom. And didn't get down to S1, but whatever. $1. That's pretty healthy on the psychological level here. For gasoline. Gold, same thing. I started getting out of some calls on the smaller miners, the little guys. Watch out for the frenzy if this thing should pick up. Like I pointed out yesterday over the natural gas, some of those drillers didn't even react. Okay, and so that's, if you were in something that was greasy or grimy, come out of the ground type of deal, and it didn't go up, you're on definitely get out of that thing. That's how I look at it. But I started taking, yes, I said 1400, but I remember I started this whole commodities outperforming equities in December. So I'm 2 months into this thing. 2 months of holding on and this stuff. I started on, hey, why not, right? At some point, which is fine, right? Eventually, gold will go down to what it costs to pull it out of the ground. Won't have any added fluff to it. Kind of like the silver market. Heating oil, same thing. We'll say an intermediate low. Crude oil, same thing. This is the front end. So just like I showed with this morning's chart on natural gas for December, for me, I'm only playing the bounce here for, say, into the driving season. So I originally, when I started looking to the long side of crude oil, that was just to get me to the April period. But like any pullbacks here, then all of a sudden you begin to go, say, like August, September. Because no matter what, the people are still going to drive. We're still going to, we have to get reacclimated with driving. Right? Drive across the country. Okay, lumber, same thing. Canadian dollar, 7, 8 months, 7, 8, 9 years of housing in America and its cycle. So you want to buy the home builders, blah, 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 yada, yada, yada. I haven't found the chart yet, but it claims we're going to add 50% to the population